You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know where the futures options markets are? Well, let's find out together. It is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, Options Insider Radio Network. Reminding you, wherever you're getting this content, make sure you keep rating and reviewing. We've seen just an explosion in new people discovering the network and all the various programs therein. So let's keep that flow coming. Give them a safe and reliable place to turn in these troubled times. And trust me, we're seeing some of these questions and comments, particularly some of the newer entrants to the space. They need a safe place to turn. So keep rating and reviewing. It really does help these folks discover the content, and hopefully that'll help them stay in the markets, stay safe, and manage their risk a little bit better out there. And, of course, keep those questions and comments coming. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old TWIFO program today. I'm pleased to see we are joined once again in the FTSE Russell studios by our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the program, even though a little birdie tells me, sir, that you're a bit under the weather.
Yeah, first of all, Mark, thanks for having me on the show. It's always great to be here. And just to second your comments about people knowing the risk and understanding what it is they're trading, it's just I couldn't support those comments anymore. I totally agree with you. And if you have questions, reach out to the industry experts. Reach out to education at our exchange partners. Call Mark. Call me, email us. We're email this show with your questions, just like you do. It's fantastic to get that feedback. It's fantastic to get those questions And I'm just looking forward to a great show today. I am feeling a little under the weather. I got my booster shot yesterday, the COVID second shot.
Yeah, I heard the day after the second booster could be a bit of a rough one.
A little bit of a doozy today. I'm feeling some symptoms, but we're going to weather on and have a great show today.
I got lucky. I planned mine for last week. I got the second booster last week, and I planned a couple of days afterwards of not many shows just in case, and it worked out fine. I was good. So I guess everyone responds differently, sir.
Exactly.
All right, well, let's get rolling with the show. Let's see what's cooking in the land of futures options. It is time to unleash the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. It's another strong green week, at least so far. Today's action may change that a little bit. At least the equity space turned into the dark side in the middle of our show earlier today here, but at least net on the week since our last show, everything trading over there at CME land. It's pretty much all green all the time. In fact, it's like you can put together maybe a dark side bottom 10 if you really tried hard, but that's kind of about it. That's about as far as you can go. So, Sean, it's all green all the time on the screen this week. So I have a feeling I know where you want to go, but I will allow you to choose, sir. Where should we begin our journey this week? To the light side or to the dark side?
We're going green, Mark. We're going light side.
There's
a lot of green.
I hope you like Ags because it's green and it's Ags. It all goes together, right? Because we got a lot of Ags.
Ags are green. The green spring's here. Things are turning green. Let's go upside.
Spring is here. The Ag heads who've been writing in saying we need more Ags. You're going to be happy today on the show, I think, listeners. A lot of Ags. Let's just get the one non-Ag out of the way right now to the top five here. Palladium up an impressive 4.78%. That would usually be enough for maybe even higher placement, but not this week because it's all Ags thundering to the upside for the rest of the top five listeners. Number 4, KC Wheat, up nearly 5%, 4.98%. Number 3, the old beans, not the meal or anything else, just the beans, up 6.82%. Number 2, corn. Haven't talked corn in ages here on the show. Corn, up 7.58%. And the big dog this week, listeners, soybean oil, feeling a little bit of, I don't know, nat gas or Bitcoin or lumber, this size of a move, 12.44% to the upside. That's Bitcoin-esque out there. Yeah, I got a feeling we'll be hanging our hat on some Ags this week. Getting distracted by our chat listeners to say it's a good day to be a farmer. Yes, it is. Yes, it is a good day to be a farmer. To the dark side, maybe not the best time to be let's say a crude oil refiner. Let's go that way. WTI to number 5 to the dark side, off almost 3.75%, 3.73%. It was number 3 in the other direction last week, up 5.54%. Number 4, RBOB, off 3.88%. Number 3, feeder cattle, back to the livestock, off 4.21%. It was number 2 in the same direction last week, off 4.13%. So that's pretty much equal moves the last 2 weeks in a row. 4.13% last week, 4.21% this week. So a rough couple of weeks here for feeder cattle. Number 2, the Nikkei, off 4.29%. And number 1 to the dark side, you can probably guess, it's Bitcoin, off 14.42%. Number 2 in the other direction last week, up nearly 9%. So Bitcoin's been moving and shaking. A lot of action out there in crypto, so everyone get all hyped up for Doge Day, yet another thing that wasn't out there in the markets. So all kinds of madness out there in crypto. We'll see if we can get to that a little bit later. But Sean, I think we got to hang our hats in the literal green because I think we got to start in Ags. What do you think, sir?
Definitely. Let's start in Ags. There's, your upside was all Ags today. We've been having a lot of requests from lots of listeners to talk more on Ags. So let's give the Ag universe some time this morning.
There we go. Ag universe, you get your wish. It is time to dive into Ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk Ags.
Took me a second to find that drop. We haven't played it in a while. All right, welcome to the Ags. Listeners, you guys know where to find these reports. Could be for Ags or anything else you want to parse that's trading over there at CME. Begin your journey, cmegroup.com. /TWIFO, TWIFO, TWIO also works this week in futures options, this week in options. Both of them should get you to the same place. If you're going to do that, let's start where we're going today. Go to the Ags section of the drop downs and head on in to the beans. Let's start at the beans because the beans are just moving this week. 12.44% to the upside. That's a good run for the beans. We haven't really sunk our teeth, again, pun intended, into all the ags out here in a while. So let's just dive right in, shall we? Soybeans coming into showtime, 1536.75. That's quite the run. They're up 7.22% just this week, just since Monday. And of course, almost 12.5% since our show last week. That's 103.5 points, if you're wondering out there. And, you know, we always talk about a lot of other product categories, and they get a lot of love and a lot of action. But if you're looking for an active product complex, you shouldn't really look past the ags. They put up some numbers. Right now, soybeans, 404,000 contracts on the tape this week. So if you're looking for something that's pretty deep and pretty liquid and it's got some action to it and some vol, you could do worse than looking at the old beans. And you know what? This is kind of interesting because this kind of dovetails. CME just put out their Q2 ag update. And they mentioned, actually, by the way, I got so excited to talk ags, I forgot to do our vol movers and shakers for the week as well. Let me just squeeze these in really quickly because they kind of dovetail with the ags. The top decliners for this week from a vol perspective. The number one was Bitcoin, the June contract, off 9%. Number two, the Bitcoin May contract. Again, this is vol collapsing here, listeners, off 8.25%. And then number three was the Eurodollar 3-month mid-curve June contract, off 6%. And the vol gainers, well, that was all ags. It was KC wheat number one, the July contract, up 4.6%. The July Chicago wheat contract number two, up 4.4%. And getting out into the softs there for number three with lumber, up 3.75%. Yeah, lumber's been moving. Surprised it's not on our movers and shakers this week. It just got trumped by all of the ags out there. But CME put out their Q2 ag update right before the show. And they mentioned how short-dated new crop options and just short-dated options and weeklies in general, we're kind of lighting it up. They say here, ADV for weekly options in the ag complex up 122% just this year, just year to date, and up 29% for the short-dated new crop options year to date. And the short-dated new crop options ended Q1 with over 128,000 contracts of open interest. That's a new record out there. So folks seem like they're starting to embrace the weeklies in the ags, and that seems to be the case out here right now. We've got the May week one contract goes out in a day. That's doing 32% of the paper this week. So a lot of very near-term action here in the beans. Let's go a little bit farther out so we can wrap our head around something that isn't going away tomorrow. And let's go all the way out here. Where should we go? Let's go out to July. Let's go out to July. That did about 25%. So a quarter of the paper going up in July as well. If you're wondering, by the way, what that vol is in that contract that's going out tomorrow, it's nearly a 30, up nearly 13 points. Get out to July, a little bit calmer, saner heads. It's a 24.5. Still up almost 4.5 points this week. So that's a fair amount of vol out there. That's certainly higher than what we're seeing in the equities right now. So if you're looking for a little bit of vol, maybe the beans could be a place to look. Let's look at some skew action, see what's going on out here in the beans. Last week, the beans, 6.5% cheap were the puts. This week, 10.6% cheap. So puts getting cheaper. Last week, the calls were bid 11% rich last week. And this week, calls even more bid, 12.6% rich. So the vol's up, the calls are up, the puts are in. So a lot of action to the upside. Again, not surprising. The beans have been roaring to the green all week here. In terms of where the action was, though, I said it was mostly in that front contract going away tomorrow. And the 1,500 calls, so the even calls, which are 36, almost 37 points in the money right now, dominating the tape this week. 20,000, almost 21,000 going up. The lion's share actually yesterday, 7,400, 5,900 on Tuesday, 2,300 yesterday. Most of that all week long was closing, actually. So I guess as we rallied through the 1,500 strike, folks had 1,500 calls on that they took off to the long side. Maybe they were short some and they were taking them off because we were blowing through it. Either way, it seems like folks have been closing out some 1,500 calls as we blew through that strike here. It looks like the 1,500 calls were also active in July. That was also the number one contract out there with about 12,000 contracts going up here this week. Let's see if it's a similar phenomenon, if it's closing out there. Of course, that contract was going away pretty soon too. Yeah, a little bit of a different beast in July. Paper mostly opening. Some of the near-dated nature of that contract also skewing things in the May week 1 contract. Again, that's why we don't like to analyze contracts that have 1 day to go. Yeah, July, more opening paper on the 1500 strike, which is a little bit more what I expected. I can sink my teeth into more soybeans, but there's so many ags dominating our top 5 here. Listeners, we got to keep on rolling. Let's head on out. We haven't talked about our number 2 mover here in quite some time. That was corn, up 7.5%, almost 7.6%. Corn's another one. Does some stealthy paper. We've had some ag heads right in talking about how corn should get a lot more, love on the show because it does a lot of paper, and they're not wrong. Corn is pretty action-packed. Sean, I know you watch this stuff as well, and corn does some numbers right now, Sean. Corn closing in on 1 million contracts for the week, 969,000 contracts right now for corn, Sean.
I come from the Chicago markets here, and lots of grains traders used to be on the train with me, and I'd hear them talk the markets, and I'm not surprised. I think bigger moves bring bigger hedges, bigger trading volume. So it's that grain market is robust at times at CME Group. So I'm not being caught by surprise at all.
Yeah, I remember when I left the equity options realm and the index options realm at SIBO there in the early 2000s, right after the dot-com meltdown, people were kind of fleeing the equities and looking for new things to trade that had liquidity and vol. I knew a lot of guys who were diehard equity and index options traders who flocked into the corn pit over there at CME because it offered a lot of the things that are analogous to a large equity in terms of volume, in terms of volatility, in terms of action across the months. There was a lot to sink your teeth into out there. Obviously, the underlying very different, but once you can wrap your head around that and how the skew tends to perform out there, and again, it certainly does the numbers. Closing in on 1 million contracts here. So I know all you corn lovers out there will be excited. Today is your day. Let's get into it. Today, right now, coming into showtime, corn at 650.5, up 11% so far just this week. And of that action, 36%, the most active month, was Dees. All right, so the corn gods are smiling on me here. I don't have to parse paper that has 1 day to go. If you're wondering what the vol is in corn, again, if you're just hung up on equity vol all day and you're saying, well, I wish I had something a little bit higher, you want something a little bit juicier, Dees corn vol, 35.09 right now, up 4 3/4. So a little bit of juice to be found out here in the corn land. Let's look at the skew really quickly. The puts, 8.8% cheap last week. This week, 9.2% cheap. So the puts continue to be cheap. The calls, 7.3% rich. Last week, this week, 4.1% rich. The calls coming in, you may be a little bit surprised by that, given we had such a rock'em sock'em move, but you blow through some strikes to the upside, people are going to probably take those calls off. So that could probably be contributing to that. Let's see what paper we saw out here. Yeah, it is upside, actually. It's 600 calls. So we blowing through, we rallied 38, almost 39 points this week. So that 600 strike coming a lot more into focus here. 51,076 of the D600s trading this week. The big day was actually yesterday, 17,700, about 15,500 so far today. So today, no slouch as well. Tuesday, 14,200. Monday, about almost 4,000. It's kind of back and forth from an opening perspective as well. Tuesday was actually mostly closing, and then Wednesday was opening. So back and forth on the 600 strike, which is kind of interesting. Then we drop off a bit for number 2. Looks like it is the 550s, which is, again, a little bit more relevant strike, closer to where we are right now out here, because that Dees contract, listen, the Dees futures at a 553. So that front month contract that's going away in about a day, that's at a 650. But you get out to Dees, a little bit different beast. That's at a 550. So that's why the 550 calls were so active this week. 30,000 almost exactly going up this week. The big day was Wednesday, 11,500. Today, 9,000 and about 6,700 on Tuesday. Again, back and forth, opening versus closing. No one big bias to the paper here, which is kind of interesting given what we saw out there from a skew perspective. Let's see if any other, 600 calls also active here in July. 24, almost 25,000 going up here. So 600 calls are where it is at this week. Also, 26,000 of them went up in this contract week 1 in May. That's going away going away pretty soon here, listeners. That one they did 26,000 of 600s there. And in July, they did almost 25,000 with the big day yesterday, 7,800, 7,000 today. Mostly opening in July. So kind of a back and forth seesaw of opening and closing on the 600 strike across the board. But that's definitely where the action was across all of the months. What do you think? Are you guys going to start looking at ags a little bit more here as you're trading? Here, let's really quickly, since we're doing ags and we don't get a chance to hit them that often, let's get out to the wheat as well. We saw wheat was big in our vol movers and shakers this week. July KC wheat and July Chicago wheat, both lighting it up from an upside vol perspective. So let's go out to a little bit of the old Chicago wheat here. KC wheat was actually number 4, up about 4.98%, but a little bit more paper going up in the old Chicago wheat. Again, go to that drop down, go to Chicago wheat, and you'll see for yourself the differential in terms of paper. How much paper up here in the Chicago wheat this week? About 154,000 contracts. So again, a pretty active contract. It's no corn, but again, it's doing some paper out here. And let's see, come into showtime, 710 and a quarter in that front future. That's up 57, almost 58 points, or nearly 9% just this week alone. So big run up here this week for the ags. And of course, yet again, because the ag gods hate me, all of this paper, 31, almost 32% going away tomorrow here. So let's find another. Let's go out to June. June did close to the front month. June did 30.3% of the paper this week. So we can hang our hat out there. That future's at 710.5. And we're looking at a vol. Speaking of vol, listeners, this is pretty juicy. The vol here in this June contract in the Chicago wheat is 41, almost 41 and a half. It's 41.44, up 13 and a quarter. So again, if you're looking for a little bit more vol, maybe outside of the equities or some of the other products, maybe the metals or other things, you're saying, where else can I find some vol these days? You could do worse than looking in the ags, 41, almost 41 and a half in the June Chicago wheat contract here. Let's look at the skew here. Puts 7% cheap to the at the money last week. This week, 6.6% cheap. So puts getting bid a little bit. Calls 5.6% rich last week. This week, 3.1%. I think a similar story to what we just saw in corn, where you're just kind of blowing through some of these strikes and also having obviously a back and forth on a lot of these strikes to the upside. Hence some of the interesting skew developments we're seeing. Let's see. 700 calls were the order of the day this week, listeners, out here in June, doing about 10,000 contracts, pretty close to it, like 9,600 or so. The big day is today, actually, 4,100 today, 3,100 yesterday, 2,300 on Tuesday. Back and forth again, opening and closing both days, which is kind of interesting and kind of surprising here. We also saw, looks like, 690 calls in that front contract going away tomorrow, also doing about 6,500 contracts this week. The big day, once again today, 3,300. So about half of that paper going up today. The rest of the week kind of scattered. And again, back and forth, opening to closing. So no clear bias to the paper in terms of tons of buying or tons. It's a lot of back and forth on these upside strikes in the ags, which is kind of interesting. Given the aggressive nature of the movement, you thought you might see a little bit more, shall we say, unanimity to some of this call paper, but we're not seeing that. Let's look out really quickly here what other strikes are lighting it up here in the wheat. 700 calls, also active here in July, doing about 5,300. So it seems like 700 strike was where a lot of the action was, and that wasn't it. It was 690 strikes, so all pretty close to right about the strike that we just broke through not too long ago. Doing 5,300 in July as well. Again, half of that coming today, about 2,500, and the rest kind of scattered throughout the week. Again, kind of scattered from an OI perspective. Of course, we don't know what today's OI changes on that paper. We'll have to wait and see for that. But interesting stuff afoot here, Sean. A lot going on in the ags. But you know where else there's a lot of stuff going on we have to dive into today, especially this week. You know, we didn't see it net on the movers and shakers because it moved up and it moved down, but small caps were kind of all over the place this week. So we got to get into a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, let's do it. Let's dive into equities. Again, this story is kind of changing by the minute. Just look at our last show. We saw the market start selling off. We saw equity vol start ticking up. Coming into the start of today's show, we had RVX, of course, the VIX of small caps at about 27.5. So that's actually back up from where it was on the previous show, up nearly 2 points. I mean, small caps have been rocking and rolling this week, so not surprising that small cap VIX would be ticking up. VIX itself coming into the start of the show. Again, we were talking about a 19 handle earlier in the day. It was at a 1983 you got at the start of the show. Man, that's lofty. That's pretty much the high for the day, right? Coming into the start of the show. That's up 3 points. VIX has given some of that back now. It's down to about 18.5, but still, that's pretty much, that's a big pop. And again, shows you what the heck we were seeing out there in the markets earlier in the session. It seems like some of that aggressive sell-off, which appears to have been driven by the markets getting a little spooked by the administration's talk of a new capital gains tax. Seems like some of that sell-off has mitigated. Most of the major indices were off 1% coming into showtime. Now they're off, looks like about anywhere from 2/3 to about 0.75%. VVIX, the vol of vol's moving, so VVIX is getting up there again. Back up almost to that 120 level. It was just at 109 on our option block show, got up to about 119 at the start of this show. Puts it up 12 points from where it was last week. And vol Q, it was kind of glued around that 21 level for weeks. And then it sold off, and we saw it down a little bit on the side of the option block. I was happy to see a little bit of movement in there. It's back up again, up to 22 again, which puts it up about 2 points from our show last week. And good to see a little bit of evolution in that at-the-money NASDAQ vol. So let's look at our spreads here. The VIX to RVX, so the small cap to large cap vol spread, not quite 8 points, about 7 3/4 points come into showtime. Puts it about almost not even 1 1/4, about 1.15 points tighter than where it was this time last week. And the VIX to vol Q, so the S&P 500 to NASDAQ vol spread, a little bit north of 2 points, almost 2.2 points. That puts it about 0.75 point tighter than what it was this time last week. But again, these spreads are moving all over the place. So wait 2 minutes and you're going to see a lot different going on out there. It's just a snapshot coming into the start of the show. But Sean, a lot's moving right now in the equities markets. And of course, small caps have been making a lot of headlines this week. They're rallying, they're selling off. They're once again living up to their volatile nature out there. What's been lighting up your tape and catching your eye in the world of small caps this week, sir?
As you just said, just interesting markets. The market continues to move with economic data. And it all started right after we had Tim McCord on the show last week. I think we saw, and we were talking about this, that we thought the small caps were taking just a slight pause with the producer price index number that came out. Was it last week? It was the week before last, but we were talking about that pause in the market, and then the market began to move, and small caps outperformed to the downside, as I like to be quoted, and then again outperforming to the upside. And just as of the close of yesterday, you still had small caps outperforming large caps by several points, right? Year to date, Russell 2000 is up 13.69, almost 13.7%, with large caps only being up 11 1/3. So there's still this outperformance coming within the small cap universe. But as I always like to say, you've got tremendous liquidity in these products, and you've got the Russell futures, you got the micro futures at CME Group, you got options at CME Group, and you've got these now smaller products, these smaller mini Russell options over at Cboe Global, which everybody should take a look at. Symbol MRUT, MRUT, smaller bite size. Retail yet institutional size contract that I think this audience would really enjoy taking a look at. But yeah, interesting time in the markets. Volatility. We're below 30. And you and I were talking just last week, are we going to get into the 30s? We were at, I think, 29 the last time we talked, or 28 in change, just under 29. And I was kind of a believer that we were going to just pop back over 30. And with the recent sell-offs, we're trending with the rally here now, 27 and change. So it's interesting to see. Great trading opportunity. The VIX RVX has tightened as it does, and as the market continues to be volatile. Interesting times, and I'm sure that there's been some really interesting volume in Russell options as of late as well.
There has been. Let's get into it. By the way, I'm looking here right now. It flirted with the 30 this week, Sean. It got up to 28.81 in the RVX. So it couldn't quite break it this week, but it got pretty close there for the RVX. Yeah, we were talking for a long time here on the show, listeners. It seemed like small cap vol didn't want to break the 30 handle to the dark side. It finally did a few weeks ago. And now for a brief period, it seemed like it was threatening to break it back up again. But hey, if this movement, this sell-off continues out here, who knows? Could 30 be back in the sights? Let's see out here. Let's also switch out and let's look and see what's going on out there from a Russell 2000 perspective. Pretty decent paper so far on the tape this week. Nearly 30,000 contracts as of right now going into the Russell 2000 at CME. You guys can find this for yourselves. Go to the drop down, get back out of ags, go into equities, go into the Russell 2000. That's where you'll find this. You'll see we're at 2241.70 coming into showtime, listeners. So you're off 17.3 points, or about 0.75% on the week here. This index has been vacillating all over the place this week, listener. So again, living up to its vol legacy. That front vol contract, by the way, that has 1 day to go. That's a 31 right now. So that is north of the 30 handle. That's up 11 points this week. That's also where 58% of the paper went up this week. So may have to hang our hats out there just because it's so hard to look beyond the weeklies and the equities. That's where so much of the action is. Yeah, it's hard to parse skew in a contract that has a day to go. I will do my best. It was 22 halves, though. That's where the action was. People have been asking us for a while, is there a lot of action in the small delta calls? This week, not as much. For the last couple of weeks, Sean, we've been talking about what, right? 24 half strike. 24 half strike. That's where all the action was. That's where all the love was. When Matt was on the show recently, he was talking about those calls and all these small delta calls, lining it up. It seems like this week, when we're bouncing around a lot, it seems like folks didn't want to mess around with the small delta stuff. They were going right for the meatier, now at the money stuff, the 22 halves. Those were dominating the tape pretty much most of the week, and followed right behind it were the 2240s, and right behind that were the 2235s. So, Sean, a little bit different this week. It's front month, actually front week going out tomorrow. At the money and near at the money calls that were dominating the paper this week. Does that surprise you, sir?
Not really. These shorter dated options have just exploded in popularity, and you have them at both CME and Cboe Global. So I'm not surprised at all. These spreads have such fantastic liquidity in the options, but also there's still some juice even up until the end here. So it's really interesting to see such big volume coming in at right before it ends here. It's really interesting.
They're diving in with the last few minutes to go. It's funny, of all the complexes out there, we just talked about near dated contracts and the ags. Of all the complexes out there, the adoption, the widespread adoption of the weeklies in the last 5 to 10 years has really impacted the equities the most. It's just changed the game completely. If you're not looking at the weeklies in a major, I don't care what it is, if it's a large listed equity or if it's a index out there, you're missing the lion's share of the paper that's going up week in, week out. People just love to trade near dated contracts. A lot of premium harvesting, obviously, but still just all near term all the time. That's reflected again, nearly 60% of the Russell 2000 paper. It's not longer term upside, AKA small delta calls this week. It's front month, right around at the money stuff. So maybe reflecting maybe a little bit of different change of perspective from the players, maybe different players coming in who could afford the meatier stuff versus the farther out of the money stuff. Either way, bit of a change of the game this week, which is kind of interesting. Let's look really quickly. You can't do skew with a day to go. So, but if you wanted to really quickly, 8.8% rich last week, 7.3% rich this week. With the puts this week, 9.2% cheap. With the calls, 8.1% cheap this week. So calls getting a little bit less cheap and the puts getting a little bit less bit, I should say. So yeah, but again, it's 1 day to go. So take all that with a big, tasty grain of salt. Where else should we hang our hat? People might say, hey, crypto, it's moving. Bitcoin moving. It's number one to the dark side. And actually, it is having probably the best week it's ever had over there at CME from an options volume perspective. 354 contracts on the tape this week. I mean, that doesn't sound like a lot, and it's not. But from a CME Bitcoin perspective, that's a lot. There are weeks when it does a lot less than that. Remember, it's also a 5X contract, so factor that in. It's a big, beefy, hefty contract. I talked about that on the show with Tim last week about how they're looking to get some smaller multiplier contracts out there. That will go a long way, I think, to fixing that. By the way, if you're wondering what the hot thing is, I'm not going to do a full Bitcoin rundown because there's not much to parse. But if you're wondering what the hot thing is out there, it's the 40,000 puts in Bitcoin. That reflects a bit of a narrative, maybe a little bit of a sea change that we've been talking about for a while out there on our crypto rundown program, which is Bitcoin is usually all calls all the time. And if you get longer term, that's still the case. But net across all the OI, the puts have caught up. And they're kind of neck and neck with the calls now. And the number one trade of CME is the 40,000 puts. So it's near dated puts versus longer term calls. I guess who you looking at? You're looking at the holders who want long term, or maybe near term they're concerned they want to lock in these prices. Either way, that's what we got, doing a little bit of a tug of war out there in Bitcoin options this week. Long term calls versus very near term puts. And so far, at least the 40,000 puts are the winners this week over there at CME. But you know what? We also talked about a lot of dark side this week in the energy complex. Let's get to that. A little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, let's do it. Time for a little bit of the old Texas tea, aka WTI. You know where to find it. Go to the energy drop down, then go to WTI, and you can begin your journey right alongside me. WTI, of course, number 5 in the dark side this week, off almost 3.75%. We have an interesting poll that touches on this and Bitcoin a little bit more. Sean and I will get to that in a little bit in your feedback segment. But first, WTI managing to hold on to the 60 handle this week, despite some pressure, off 1.6 or so points on the week, or about 2.5%. That's just this week, obviously off nearly 4% since our show last week. So we're looking at about a 61.5 strike coming into the showtime for our At the Money here. Let's see. Action-wise this week, it was out to the June contract. So the WTI gods at least can smile upon me. That contract has about 25 days to go. So we can parse that one. None of this one day to go stuff like the Ags and the equities are just loving to throw at me this week. 61.62 out there in that June contract as well. Vol-wise, again, getting a little frothy again out there in WTI. 35.83 coming into showtime. That's up about 3 1/3 points from last week. Again, yet another complex that's showing markedly more vol than most of the equities, outside of small cap, which is hovering close to a 30. But get into the S&P and the NASDAQ, they're not anywhere near the 30s. So if you're looking for a little bit of vol, Ags, and maybe a little bit of WTI wouldn't be the worst place to look either. By the way, let's look at some volume here so far this week. WTI, a little bit north of 250,000, about 284,000 contracts. It's actually kind of light for WTI. Usually we see a little bit more on the tape as of this week. And where was that paper this week? 36%, so about 100,000 contracts exactly going up in that June contract. So let's go out there from our skew perspective as well. So the vol was 35.83, up 3.34 points in the June contract. The puts last week, 8.7% rich to the at the money vol. This week, 7.4% rich. So the puts getting a little bit less bid this week. And then the calls, 5.3% cheap last week, 4.6% cheap this week. So the calls getting a little bit of juice back, not much. It's not a huge skew change this week. A little bit out there. Let's see what the action was. Again, we're threatening that 60 strike. So you might say the 60 puts, and you'd be close. But actually, you would not get the cigar this week, Sean. The winner out here this week is actually outside of June. It's in the July 80 calls. That was the most active contract out here in WTI this week, doing 10,000 almost exactly, 5,700 today, 4,001 yesterday, and the rest kind of scattered throughout the week. Good chunk of that opening yesterday. Obviously, we don't know about today's paper. So the 80 calls, that's an interesting one. Looks like 75s are active too. About 7,500 have gone up this week. So maybe some verticals. Looks like 4,000 went up of the 80s on Wednesday and 3,600 of the 75. So could be some vertical action going up there. Both of those were opening. Today's paper, not so much. 3,078 of the 75s versus almost 6,000 of the 80s. So it could be a ratio, I suppose, there. But either way, 75s and 80s active out here in July. That kind of reflects what we're talking about in our poll. I'll get to that in a little bit, but maybe some upside for WTI. But obviously, upside calls were active here this week. But the number one with a bullet, 80 calls here in July. Then we go back to June for number 2, a close number 2. It's the 60 puts. That's more along the lines of what I expected, given the fact that we're threatening the 60 handle again to the dark side. And that had about 9,500 contracts this week. The big day was Wednesday, 4,600. Not much at all going up today. And then yesterday was mostly opening. 2,300 on Monday. Most of those opening as well, about 2,200 on Tuesday. Good bias of closing there. So a little bit of back and forth paper throughout the week on these 60 puts. Again, as we threaten it, move away from it, that's probably to be expected out there. So 60 puts and 80 calls. The latter there, not exactly what I expected out here in WTI. You know, WTI is always good for some weird paper as well. 80s were also active out here in June of next year, listeners. Nearly 5,000 going up this week as well. So 80 calls kind of across the board. Pretty active. It looks like a 70, 80. It looks like a 57 half. 65 vertical went up. And then only 550 times. Then separate to that, a 1x2, 70, 80, 2,200 of the 70 calls versus 4,400 of the 80 calls. This is in June of next year, listeners. 1x2, 70, 80. Let's hope they're selling one, buying two, because if they are naked short to the upside there, that could be interesting. What do you think about that spread? You like that short one, long two? You like the other way around? You like buying one, selling two out there? What do you think about a June 70-80 ratio vertical here in 2022, listeners? What are your thoughts on that? Interesting strikes. I mean, a year and change from now, 70 strike could certainly be in the offing. We're not that far from it right now. So always interesting paper to be found. Let's look really quickly. Yeah, that's too rich for your blood, a little bit too far out. The D75 is also pretty active this week with about 6,000 contracts on the tape. Almost all of that today. 5,300 going up today. So it's like a little bit of action on the D75s as well. People like their funky upside ratios and flies here in WTI. Not as much as in gold, but still a fair amount of interest in those. And there's always a fair amount of interest from you folks with your questions. So let's get to them. A little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. Before I get to your questions, I want to draw your attention to a poll. Just went live earlier today on our social media, twitter.com/options, easiest place to go to participate there. A fun one, kind of end of the week one out there. Really easy. It's quite simply, which of these four levels do you think we will hit first? Give you four choices. So a VIX of 14, which not going to happen today. SPX of 4,300 also looks like not going to happen today. Bitcoin of 70,000, probably not going to happen today as well. Or our old friend WTI, what we were just talking about, at a 70 handle. Sean, an interesting mix, an interesting smattering here. We've got S&P vol, we've got the S&P itself, we've got a little bit of crypto and a little bit of energy there. So we got a whole smattering, vol, equities, crypto, and energy. Do you have a vote in this? And then more importantly, what do you think our audience is voting for, sir?
Great question. Great poll question. SPX at 43 would bring VIX to probably 14. So that's, as you said, not going to happen. Bitcoin 70,000. Wow. Or crude oil. Wasn't it a 70, 80? 1x2.
It was a 70, 80, 1x2 I was just talking about for June of next year.
But boy, that guy's got to be legging into something. Like, you don't just leave that upside unhedged. Interesting trade, but I guess we'll see what happens with crude oil.
Bitcoin 70. That's where you're leaning. You think our audience is leaning there too?
I would think so.
Well, so far at least, you are correct. You're very prescient when it comes to the audience, Sean. It's like you have your finger on the pulse of the listeners out there. Because right now, at least, it's still early going. The polls went live earlier today. But Bitcoin, 70,000, number one with 43.3% of the vote, followed by a dead heat number two. Again, it's not surprising. They are related. VIX at 14, S&P at 4,300. They're both at 20% right now. And then WTI bringing up the rear. Sean, no love for WTI 70, only 16.7%. Get over there at options. This will be running for a few days. So you can, if you're listening to the podcast after the fact, you'll still have time to go vote. Make your voice heard. I wish there was a room for a fifth. We could say, hey, none of these could be a massive sell-off or something, but no room for that, listeners. Only 4 choices on the Twitter polls. All right, let's see what you guys have in store for us. First up, I wonder what this guy trades. His handle is Oilman527. Well, Oilman527, I'm guessing your question is about corn. Oh, no, he's not. He's about crude oil. I'm surprised. He says, what are your thoughts on hedging crude oil options before the OPEC meeting on April 28th? I guess it kind of depends what you mean by hedging before the meeting. I mean, we just did WTI a few minutes ago, and I was surprised we didn't see more action, kind of like what you're referring to, which is action around the 60 put strike, which you could reasonably intuit to be at least partially driven by hedging. And we didn't see a ton of that. Like I mentioned, it was crazy upside. It was the 80 calls in July. It was that funky 1x2 a year and change from now. There were some 60 puts, so it can't say it was all upside all the time. 60 puts were a close number 2 in June. So there probably was some of that going there, but it wasn't as much as I thought. I thought the 60 strike would kind of be dominating across the board here, and we did not see that. So I guess, suppose, take it the other way, you think OPEC could say, hey, the gloves are off and crude oil is going up to the high heavens, in which case maybe there's upside. Maybe not hedging, more of speculating on the upside. So you could maybe reasonably intuit some upside call paper as being OPEC driven as well. But straight up hedging, the OPEC meeting, not seeing a ton of it outside of what we saw there in the June contract, which again is kind of interesting. All right, Diggs with the Z says, big swings and small caps this week. Any big skew moves? Well, we kind of just broke this down earlier there. Diggs with the Z. Part of the problem is so much of the action, like all of the equities, was going up in contracts that go away tomorrow. So, of course, there's going to be huge skew moves because it's going away tomorrow. The gamma's exploding. Nothing makes sense. So, parsing the skew, like I pulled it up again right now. And, yeah, there were some decent swings, but it's hard. Once you get beyond, let's look at a contract that did some paper that is not exactly going away tomorrow. All right, so here is the week 3 May contract that has 29 days to go. That did about 11% of the paper. So not blowing the doors off, but it did some paper this week. And the skew out there, the puts were 16.4% rich last week. This week, 13.5% rich. So the puts actually coming in a little bit. Calls, 12.4% cheap last week, 12.1% cheap this week. So the calls kind of staying unched, but the puts actually getting a little bit less bid. That's interesting. So I guess as we sold off and then rallied off of it again, maybe some of that put love went away, even though we are net down on the week here. But again, those puts were kind of juicy last week, so that could also be playing a part of it as well. It's just they got too rich. Folks could not buy them anymore. So huge, I wouldn't say huge swings in the skew. Sean, he mentions here, big swings in the small caps. Did you see anything skew or vol-wise that really stood out to you this week, sir, as being somewhat aberrant or driven by these big moves?
No, as you just said, as we had a breakdown of this volatility earlier in the show, these big swings are going to happen. I'm not surprised. I think sometimes what's the expression? The tail wags the dog. Some of these moves come in because there was a pop. So I'm definitely not surprised. But I'm always a fan. I'm a hedger. Just as your oil man 527 thoughts on hedging crude options. I'm always, before a big announcement, I'm always looking to make sure that I am protected in my positions, or when I was a trader, I should say. And that expression that I always like to make in regards to index volatility is buy puts when you can and not when you have to. And looks like vols come in quite a bit there in that skew on those downside puts. So there's an opportunity for trade, and there's also an opportunity and it looks like people are taking advantage of harvesting that vol. So I hope that helps dig Z.
And, I did mention when we were breaking down Russell 2000, I probably should bring this up again. We have been fixated on the small delta calls. That seems like that changed a little bit this week. So from a very, very small delta call skew perspective, that could indeed be the case. I'll have to go see if I could parse that. This is just 25 delta calls we're looking at here from a skew perspective. We're not looking at the 5 delta stuff. So I'll have to dig a little bit deeper, maybe reach out to our buddy Matt, who's been glued to Russell 2005 delta calls lately, and see if he's noticed. So that could be a change there that we're just not seeing reflected in this report because it's mostly at the 25 delta level. But that could be, if the paper looks like it's flocking more towards at the money right now, maybe a bit of a sea change out there. It could just be an aberration for this week's paper. So maybe we'll keep an eye on this and tune in next week, Diggs, and we'll see if that was a meaningful change or just kind of a one-off weekly thing. Seems like we're kind of 0 for 2 for both of our questions so far in terms of they're looking for big moves and maybe not seeing them. Let's see. Let's see if Wei Li can change things up. Wei Li wants to know. She says, thank you very much for this program. I found it both informative and entertaining. Well, Sean's the informative guy. I'm the entertaining one. What do you think, Sean? Is that how it breaks down?
I'm a Wei Li fan at this point. This is just so nice of her to say, or he. I shouldn't say she, but our big fan here, Wei Li. Thank you very much for these incredible comments. And we like to stir it up. We like to have an interesting show, and we really do appreciate comments like this. Am I entertaining? I don't know. I try to be entertaining. I'm kind of boring though, but I always try to stir it up a little bit on the show.
We'll turn it up. More jokes just for Wei Li's sake next week.
Let's go for some more jokes. Sean? Maybe some more trivia.
You had your presidential trivia. Get back to that. Maybe Wei Li.
That was fun.
Likes a little bit more. So there you go, Wei Li. You'll get some jokes and or trivia on forthcoming shows. We'll put all that on Sean's lap. He'll be the entertaining one. But Wei Li goes on to write, you guys are great. I've also been checking out the TWIFO reports for the Russell 2000, WTI, and gold to help inform my trading. Well done there, Wei Li. We've been saying this for a while. If you're interested in these products, even tangentially, you should be checking out these reports. It's free, costs you nothing, and it's a lot of great information in there. They go on to write here, I think I have a good handle on them. I just want to make sure I'm reading them correctly, particularly on the skew portion. When you're comparing last week to this week, the top week is the last week, correct? Yes, the answer is yes to that, Wei Li. They go on to write, also, how do you know when one side is trading at a premium or discount? Thanks so much. I'm really loving all the info. I also tip my cap to CME and FTSE Russell for helping bring this great show to us every week. Well, we all do that. That is a nice thing to have them helping support the show so you guys can get this great info week in, week out. Couldn't do it without the folks at CME and the folks over there at FTSE. As for how to read these reports, let's go into it again really quickly. Your first supposition is correct. You're looking at the skew column. So now let's go over looking at the TWIFO reports, listeners. I'll keep it on the Russell 2000 because that's where I am right now. Go all the way over. It starts at symbol. Go all the way over to the 25D quick skew column. That stands for 25 delta quick skew. Like I was just saying before, that measures the skew on the 25 delta calls and the 25 delta puts. That is your traditional 50 delta risk reversal. It's kind of the gold standard for evaluating skew. Now, it can miss some stuff like we were just talking about. The crazy small delta call stuff in Russell 2000 may not be reflected in that because that's farther up the call wing. But that's kind of a aberrant paper, and people aren't usually looking for 5 delta skew out there. So 25 delta put, 25 delta call is going to cover most of what you need out there. Right now, on the top line there, it shows the puts last week were 10.1% rich. That's where the capital P. So P stands for put, obviously. The capital P means that they were bid. They were a premium to the at-the-money vol. While you look next to it, the calls were 9.1% with a lowercase c. That stands for cheaper. So the puts last week, as you would expect in an equity, 10.1% rich to the at-the-money. The calls were 9.1% cheap to the at-the-money. You go below it, the next line is this week, what's going on right now in this particular product. And the puts 7.3% rich, so obviously not quite as bid as they were a week ago. And the calls, 8.1% cheap. So the calls, not quite as cheap as they were last week. So that's how you evaluate the skew. Top line is for last week. Bottom line is for this week. If you see a capital letter next to it, that means it's a premium. It is bid above the at the money vol. If it's a lowercase letter, it means it is a discount. It is trading below the at the money vol, and that percentage is what you see as the number right next to it. So great question, Whaley. So much love. We love all of you out there who take the time to listen to the show and then go and rate it and review it and send in your questions. We love all of you as much as you love us. We love you 10x. It's a big love fest here on the show, but we literally couldn't do it without you folks as well. You're the bleeding heart of the show at the end of the day. Your questions, your comments, what products you want us to talk about. You guys are what makes TWIFO such a fun show to do week after week. And unfortunately, Sean, that music means we've come to the end of another episode of TWIFO for this week. Maybe not that unfortunately for you. You soldiered on. You did your duty, sir. You fought all the way through to the end of the show. You made it. Now you can go relax from your booster shot. But before you go, Sean, if our folks like Whaley or anyone else, they want to know more info about what's cooking in the land of FTSE Russell, where should they go? What should they do?
Sean.Smith at LSEG.com. That's my personal work email address. Does that make sense? Personal work email address. That's my work email address. And FTSERussell.com is the website where you can get incredible information. And as we said in the beginning of the show, Mark, and I'm just going to mention this again, know your risks, understand the market you're trading, use our partner exchanges for the education areas that they have. You know, Cboe Global's got an incredible options institute that you should definitely look up on their website, number one. And number two, the education that you can get from the CME Group team is just absolutely phenomenal in terms of derivatives. So I strongly recommend, if you guys have a moment or a question, reach out to Mark or I, or head to those websites, cmegroup.com or cboeglobal.com. Lots of information. And again, FTSERussell.com is where you can get all the information in regards to our index products. Thank you for having me today.
Thanks for coming on. Thanks for soldiering through, sir. You did the able job.
I made it.
You can now rest. You can relax from that second dose kicking in there. You know where to go if you want to check out all these reports for yourself and anything else they have cooking over there. It's cmegroup.com. You can begin your journey at the /TWIFO reports that get you all this data we were just talking about. And then from there, you can click on out to the research that Blue and Eric and the team are doing, the great educational stuff, and a whole bunch more. But always start your journey, cmegroup.com /TWIFO or /TWIO. And on behalf of everybody over there in CME land, to Sean, everybody over there in FTSE Russell land, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in such great questions. We love all of you. We'll see you back here tomorrow. Going to be some fun, I think, to talk about on vol views, because there's some vol to view. And we're back again on Monday. Kick it all off with the option block all the way through to Thursday. And another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.